Hello, I'm Jeremy Naylor, and welcome to Beat the Street, the show that gives you all the tradable news and data you need to know ahead of the Wall Street Open in 1 hour's time. Coming up, we'll be taking a look at more US earnings. Investors are cautious ahead of a number of stocks due to start trading in an hour's time after having reported this morning and late last night. Also, today, we got some Fed speakers, and also, of course, occupying the minds of many traders is what's going on in the Middle East. In those earnings today, American Airlines sees a quarterly loss due to jet fuel costs and also new labour contracts and its divergence from what we've been hearing from UAL and Delta. And in the telecom sector, AT&T lifts its annual free cash flow target and it's topped subscriber additions forecast, looking good for a stronger open when things get underway in an hour's time. Now, let's take a look at what's happening as we wait in the day ahead. And I want to begin, first of all, with how we're seeing trading at the moment on the Wall Street Open in an hour's time. These are 24-hour markets, so we get an idea as to what's happening. And we are, with a green candle, on this chart here, which shows hourly closes. This is where we closed out yesterday's session on the cash trading day. So at the moment, we are looking for a small loss at the beginning of the trading day today. In just a minute, I'll get the update on some of the economic data we're just seeing passing. I'm going to get you to that in just a moment. But the Dow Industrials, the S&P 500, and also the tech NASDAQ, looking as though we're going to hold on to much of what we saw in terms of losses in yesterday's trading day. And that is the message I really wanted to get out. We're seeing some breaking news. Before we go to that, just to quickly take a look at what's happening with the tech-heavy NASDAQ. Same sort of price action. We're seeing some traders trying to bid this up, but we're not too far away from the cash close as of yesterday's session. What I want to do is, though, to take a look at this chart and drill it down into what's going on in 1 minute candles. Now, this is the euro dollar chart. You can see we're now into the third minute of trade after the release of the data for Philadelphia Fed manufacturing. It's still negative. It is now -9. The previous reading had been a -13. We've been expecting this to come into -6, so that is not as good as some had been expecting. Continuing jobless claims, these are weekly numbers, 17,034, 1705 was the number that we got last week, 170,000, 173,000 this week. We're not too far away from what's been going on. You can see at the moment, we've got this euro in the longer term climbing. These are only 1 minute candles, so we're looking at what's been happening in today's session. Let me just take a look at the daily chart and work out where this is likely to go. This green candle we've got is being built on at the moment with money going into the euro expense of that weaker US dollar. So MACD is pointing up. The trade at the moment is pointing up, although I'm not totally convinced we've seen the bottom yet for the euro against that stronger US dollar. The big question is just exactly how far up this number goes. We've got some speeches out today. Jerome Powell and several Fed officials are due to speak today in New York. The last FOMC meeting concluded that with the decision to leave the lending rate unchanged and range between 5.25% to 5.5% to assess how the economy was evolving. Since then, data has shown US jobs growth accelerating, re-accelerating unexpectedly, and retail sales defying predictions of a slowdown, questioning the impact the Fed's tightening campaign has had on inflation. Now, a Reuters poll of more than 100 economists published late yesterday showed more than 80% expect no rate hike at the next Fed meeting, and most also believe the Fed is done with rate hikes. However, and this is the big caveat, the Fed may well wait for longer than previously thought before cutting the Fed funds rate, according to the same economists. Around 45% of them now see no rate reduction until the second half of next year or later, which is up from 29% in the last poll. I want to take a look at what's happening with the dollar basket. This is basically the inverse of the euro-dollar trade, but it also includes the dollar against sterling, against many of the G7 currencies. And you can see the effect we're having at the moment is we've got the dollar on the way down. But broadly speaking, this upward trend is still continuing. This move that we've seen here, I should have drawn an ellipse around this because this is important. That is only a small retracement in what is otherwise this market moving higher. Now, for me, we are also getting some interesting support coming through here as well. So it's looking as though we're forming another channel here, if you like, just below where we are. We're currently trading at 106.03. That channel is supported at 105.83. So at the moment, at least, we are just moving within this new channel for the dollar. Now, the direction of the dollar sometimes gives an inverse steer to the price of dollar-denominated commodities, and gold is especially sensitive. Here's my colleague Sean Mirison with what his thoughts are around the precious metal. He was talking earlier this morning.
Tensions in the Middle East have seen a strong move in gold, which is being extended at this point in time. When we look at a chart, we saw this reversal of that $1,810 per ounce mark. Price moving aggressively high off that level, as noted by that gap, and the gap shows momentum in a direction, especially when you have a breakaway gap, a change in direction. So we had that price moving down and the gap back up. So definitely not a gap which should be filled type scenario for me, as it's a breakaway gap. I prefer to do that on exhaustion gaps. But we've traded through most of our levels here. Most recently, we've broken above that $1,950 per ounce mark. That move, that close above there, does call for a move higher, possibly 1,985. It is hard chasing a price that has started running quite a bit, but traders who are long might consider having a stop loss somewhere about that $1,935 per ounce mark in search for a move to 1,985.
My colleague Sean Mirison just a short while ago talking about his thoughts on gold. It's certainly something we've been looking at in the early morning call, and we will continue to do so as gold continues to rise. Also in the early morning call this morning, we were looking ahead to earnings out from American Airlines and AT&T. Let's take a look at American Airlines first of all. It's reporting a $545 million loss for the third quarter, and this is in contrast with the huge profits posted by its two closest rivals, Delta Airlines and UAL. American Airlines getting hit by higher fuel costs and new labour contracts. As a result, the company flew into the red. America's net loss for the third quarter was $545 million, or 83 cents a share, against a profit of $483 million, or 96 cents per share a year earlier. Now, American Airlines also says it sees fully adjusted EPS of between $2.25 and $2.50. Now, we had been looking for something like around about $3 to $3.75. So that's a disappointment as well. But look at this. All sessions on the IG platform. We've got this stock moving up at the moment, and we're indicating to a slightly stronger open. So maybe just wasn't as bad as some had been expecting. That being said, we do have an earlier morning print taking us down earlier after the immediate release of these numbers to levels not seen since the 2nd of November 2020, when we're in the depth of those lockdowns for COVID. Now, this drop here is interesting given the fact that Delta and United Airlines has been in a sort of different sort of trading pattern. But nonetheless, we are expecting a slightly stronger start to that trade for American Airlines when things get underway a little bit later on. US telecoms company AT&T has also been out with numbers this morning, and it's another all-session stock. The wireless carrier raised its annual free cash flow forecast. It now says it sees fully a free cash flow of around $16.5 billion. Now, it's up from its prior forecast of $16 billion. Third quarter revenues come in at 30.4 billion. Now that beat the street. Behind the strength, quarterly subscriber additions, beating estimates thanks to promotions and phone upgrades. Now the company has also benefited from an ongoing shift by customers into higher price plans that offer more data. And this is what a lot of these telecoms companies are now doing. And look at the way it's benefited all sessions on the IG platform. This is the rise that we've seen. We are up almost over 4.6% up. This is a Marabuzu candle. It means a Marabuzu means that when you enter it, that's the start of the candle trend. And where we are is at the total opposite end. Now, this happens to be a green candle, so it's up. The stock is expected to rise now 4.8% at the start of today's session. We're now tipping over the $15 level for AT&T. Now, meanwhile, we've got to take into account a couple of stocks, or in fact 3 stocks, that traded last night after the closing bell, and that also could have an effect on where we're directed in the US session in just under an hour's time. I want to begin first with Tesla. Shares dropping by a margin of over 8% yesterday. Last night, all sessions on the IG platform after the electric vehicle company reported third quarter results. Let's take a look at the figures. Adjusted earnings came in at 66 cents per share against 73 cents expected, and down from the $1.05 in the same quarter this time last year. Revenue up 9% though to 23.35 billion from 24.5 billion this time last year. However, that was below estimates of 24.1 billion. And it marks the slowest pace of growth in more than 3 years. Let's take a look at the share price chart here. Down late yesterday, and we're adding to this by a margin of another 2% on the way down at the moment. So we're looking for something like around about a 10% drop in Tesla shares at the start. Tesla's aggressive price cuts this year have battered its gross margins, particularly in China, where it faces stiff competition from local automakers. Tesla's gross margin dropped to 17.9% in the quarter just ended, compared with 25.1% this time last year when it had yet to start cutting prices. In Tesla's conference call, Elon Musk expressed concerns about the impact of high interest rates on car buyers. He also said that he was hesitating on the group's plans for a factory in Mexico as it gauges the economic outlook. If, he says, the macroeconomic conditions are stormy, even the best ship is still going to have tough times ahead. That's a clear change of tone. Last year, Musk was saying Tesla was recession resilient, and as we've seen, Tesla shares on the way down. But look, it was a great night last night out for streaming giant Netflix after it reported a bonanza third quarter. Earnings per share, $3.73 against estimates of $3.49 per share. Revenues, $8.5 billion. We've been looking for a figure around about that. It added 8.75 million new subscribers, though, in the third quarter, far exceeding analysts' forecasts and boosting its overall subscriber base to 247.2 million around the world. Now, the company credited a strong program slate and its crackdown on password sharing. It means that you can't lend your password out to other people, and it means they get their own subscribers. Netflix is raising prices for some of its customers as well in the US and the UK and France after posting its best quarter for subscriber growth in years. A sign, Bloomberg says, of management's confidence in the future in an otherwise dreary time in media. Let's take a look at the shares. Up yesterday by a margin of 10.5%. We're up a further 1.8% today, and Netflix expected to open up on the session at 2:30 UK time. Meanwhile, Alcoa shares fell in extended trade on the IG platform late last night after reporting a quarterly adjusted loss of $1.14 per share. The mean expectations of 9 analysts for the quarter was a loss of just over $1.02 per share. Revenue falling 8.7% to $2.6 billion from this time last year, broadly in line with expectations. Alcoa is another all-session stock on the IG platform. It's up today, but only by a small margin. Yesterday, we saw a drop of around about 4.5%. Now, outside of all this, there's been a big development on the AI front. Now, Foxconn and NVIDIA are teaming up to build artificial intelligence factories. These new plants will use NVIDIA chips and technology for a range of applications, including self-driving cars. But Foxconn's ambitions are bigger than just autonomous cars. By linking up with NVIDIA, it wants to go from a manufacturing supplier, Foxconn manufactures iPhones, of course, to a platform solution company. Now, this does have big impact potentially for NVIDIA shares. This is one of these stocks as well that trades all sessions on the IG platform. You can see we're up today after 2 days of losses. For NVIDIA, All this allows it to use its chips, including its cutting-edge GH200 super chip that's still barred from being sold in China. NVIDIA shares have tripled in 2023, boosted by AI hopes, giving the company a market value of more than $1 trillion. Since the lows on this chart back in January this year, to the high point that we saw up at a record high there at $518.55, so 267% rise in its shares. That's it. Taking a look at some of the stocks on the move expected at the start of today's session at the bottom of the next hour. I just want to quickly revisit where we are in terms of the share price movement on the indices. Not much move on from what we were talking about 10 or 15 minutes ago. There's certainly been nothing since we spoke at that point to shift my opinion that we're not going to get much move on from the losses that we saw across Wall Street in yesterday's trade. That's it. I'll be back at 7:30 tomorrow morning for tomorrow morning's early morning call for the European markets. And again, this time tomorrow, as we round out the week that has been on the market, still digesting the news coming through from what's happening in the Middle East.